UK government bond yields have hit their highest level since 1998. The 30-year bond yield reached 5.7%, and this creates a dangerous loop. Higher bond yields make the government's finances worse, which in turn pushes it even higher. At the same time, the pound has fallen. So why are yields rising? There are several reasons for this. Investors are worried about the UK's growing debt pile and plans for more government spending amid weak economic growth. There's also political uncertainty from recent cabinet changes. On top of that, high inflation could prevent the Bank of England from cutting interest rates, which would normally help the economy. Global factors like rising US borrowing costs and increased bond sales in Europe are also playing a part. The bond market has become riskier due to big change in who owns the government debt. Foreign investors now own about a third of UK's bonds, while traditional stable buyers like the pension funds have significantly cut their holdings. This makes the market more prone to wild swings when investor sentiment changes. The UK now has the highest 10-year bond yield among all G7 nations, showing that investors are demanding a higher payment for the increased risk. This puts immense pressure on the Chancellor before the autumn budget. The crisis is a test of whether investors still trust the UK's financial stability. To succeed, the government must present a believable budget with clear long-term plans. That's all for this video. Thank you for watching.